I went to the bank yesterday for an RSP loan and ended up correcting the banker. And that's when I realized there are things about RSP loans that even bankers don't always explain properly. I wasn't even planning on making this video, but after my experience yesterday, I couldn't not do this video for you. If you're thinking about borrowing before the RSP deadline, you need to hear this before you sign anything, because this could save you money and prevent a mistake. Today, I'm covering why someone would get an RSP loan, who actually offers them, open versus fixed repayment. This matters more than you think. The January-February contribution rule the banker got wrong, how to compare it to your line of credit, and one major privacy red flag I experienced. Number one, why would somebody get an RSP loan? Let's start with the purpose. An RSP loan is usually used when you want to maximize your RSP contribution before the tax deadline, you're waiting on a bonus, you didn't save enough that year, you had a higher income year and want to reduce taxable income, you have unused contribution room from previous years. The whole point of an RSP loan is pretty simple. Think of it like a circle. Once you make the RSP loan, you increase your RSP contribution, you reduce your taxable income, you generate a larger tax refund, use that refund to pay the loan. If this cycle doesn't work for you mathematically, then maybe the RSP loan doesn't make sense for you. Number two, who gives RSP loans? So when we think of the bank level, direct investing, and wealth management, you can't just get an RSP loan the same way in all three areas. So when I refer to the bank, it's when you walk into the bank on that main floor, that main level, those are the bankers. That's the bank that I'm talking about. Direct investing is when you open up your own accounts, you invest yourself. There's no advice, minimal to no advice. You don't interact with a human being. You're responsible for all the decisions. And wealth management is when you walk into the bank, but you take an elevator to go up to the higher floors. You have a relationship with a human being who does way more. They ask you way more questions. They have more capabilities, more flexibility than the people at the bank level do. So why does this matter when it comes to an RSP loan? Well, the bank may send you an email or a letter about a pre-approved RSP loan, and they may change the numbers, but it's pre-approved and only for a set limit with certain terms. If you're direct investing, they'll send you back to the bank. You can't get an RSP loan if you're direct investing, as far as I know. And as for wealth management, you need to have a relationship with a human being, with an advisor, before you do the RSP loan. It's not so easy to just walk in and say, hey, I don't know you, but can you open up an RSP so I can do an RSP loan? I mean, it's happened. I've seen it over my 20 plus years in the industry. But generally, the advisor needs to understand more about your situation in order to guide you properly. And ultimately, that's what you want. Now, you don't have to be in wealth management. And yes, people like me, and financial planners and advisors that are independent, can also help you with an RSP loan. But my point here was just to differentiate between how the RSP loans are marketed and how they work when it comes to the different areas of the bank. Number three, pre-approved loans, marketing versus strategy. Banks love sending pre-approved RSP loans, but here's the thing, based on my experience this year. The amount can change. For example, I received two different emails. One was sent a couple weeks ago for $15,000, and a second one was sent more recently for only $5,000. The $15,000 offer had expired. Boom, poof, disappeared. Meanwhile, the $5,000 offer was still there and available. The other thing you need to know is that the interest rate may not be optimal. I'll talk about that more in a sec. And number three, the repayment terms may not be as flexible when done through a pre-approved RSP loan at the bank. On the wealth management side, you can actually apply for the amount that you need, so you have more flexibility, particularly around repayment options. So ask questions, don't just click accept. Number four, open versus fixed repayment. This one is critical. Open repayment means you can repay the loan at any time, there are no penalties, and you can apply your refund immediately. Now, in my conversation with the banker, this person kept telling me that the loan was fixed. In other words, it was a 12-month repayment loan where I was forced to do monthly payment for 12 months and there was no flexibility or repayment earlier available. And I asked this person 3 times, are you sure? Because when I first started my career, I was helping lots of clients in applying for RSP loans in the wealth management arm of the bank. And when I received the email a couple weeks ago directly from my bank, It actually explained how if I got this amount of a loan and I applied this much of a refund, I'd only have this much in monthly payments. See, that's marketing. But when I asked the banker, so is this an open loan? As in, if I get my refund, I can repay it right away. The person said, no, it's a fixed loan. I said, are you sure? 3 times, to the point where this person was uncertain because I was certain. I had the confidence to know how things work. And so this person said, you know what, I'm gonna go find out and come back to you. And I said, yes, please do that. And don't you know, they came back to me and said, you know what, you're right, it is an open loan. This is why I'm making this video. The reason you want an open loan is because that flexibility reduces interest costs, especially if you can take that refund and repay it right away. More money in your pocket, less at the bank. Number 5, the January-February contribution rule. And this is where the banker got it wrong. When you contribute to your RSP in January or February, you can actually apply that contribution to the previous year or to that current year. Now, I did a quick research before even making this video this morning, just to see, is this information easily accessible to you? Is it easily searchable? Can you find it anywhere? And you know what, to my surprise, no, you cannot. Some of the text is written in a way that if you're not in this industry, you won't understand the nuances of the wording. There was only one place, and it wasn't a bank, it was a wealth management company, but it wasn't a bank that explained it in such simple terms. So when you file your tax return, you report the January-February contribution, but you decide how much of it to apply to the previous year and how much of it you want to carry forward to the current year. Now you can apply your full loan amount to the previous year, a part of it, or you can apply it all to the current year. It's your choice, but know how it works. Because when I asked this banker to clarify, hey, so are you sure that I can apply this? Is there any restriction from this bank? And they weren't so sure about the answer, right? They kept trying to tell me that the current RSP loan made in my first 60 days of this year would only apply to the previous year. And that's because of marketing. That's not because they understood how RSPs work. Understanding this gives you tax planning flexibility. Number 6, compare the interest rate. Compare the interest rate to the RSP loan versus maybe a line of credit. Now, when I compared my unsecured line of credit interest rate, it was 2% more than this RSP loan was offering. So that's an easy yes, depending on the rest of the terms of this loan. But it's important that you know that you have more than one option, more access to different funds in order to make your RSP loan. Now, if you have the cash, great. If you have a line of credit, now an unsecured line of credit will have a higher interest rate than a secured line of credit, and that secured line of credit will be secured against a property, your house, real estate. And usually those interest rates are a lot lower. So if it makes sense for you to borrow that money to make the RSP contribution, get a larger refund so that you can repay it pretty quickly, then that might be worth considering. But again, a bank won't tell you that. Even though they have access to your bank accounts, your lines of credit, your credit cards, they see the information, but this person wasn't proactive about offering me another strategy because putting an RSP loan through helps them with their target. Number 7, do not exceed your RSP contribution room. Check your RSP contribution room on your CRA My account or your notice of assessment. Never assume, always verify. Now, if you're doing this yourself or you have a self-directed RSP, you're in charge of all that. If you have an advisor working with you, they'll probably double check that information for you based on the conversations you've had and the information that you've sent them for your financial plan. Number 8, estimate the tax impact first. This entire strategy for an RSP loan hinges on the refund. If you're in a lower tax bracket, it may not make sense for you based on the interest cost. Now, I like to use Ernst & Young's free calculators to help me determine simple math on the tax savings. It does depend on tax deductions and credits that you would apply based on your situation. I'll link the free calculators below in the description box. Always run the math. Number 9, the privacy red flag. This shouldn't have happened. While I was in the virtual meeting with the banker, they were sharing their screen so that I could see my application. But there were times when they had to flip to different screens, and lo and behold, I could see all kinds of other clients' names and information, and that shouldn't have happened. That's a data privacy breach, and that's a big no-no for us in the financial services industry. If you are in a virtual meeting, you should never see another client's information. If this happens, speak up. Professional standards matter. The reason I've made this video is because most RSP loan videos talk about how you should do a RSP loan to get a bigger refund. But what they're not explaining, open versus fixed loan repayment, wealth management relationship requirements, direct investing limitations, January, February deduction flexibility, line of credit comparison strategy, and real-world compliance and privacy standards. That's the difference between marketing and financial literacy. Some final thoughts for you. An RSP is just a tool. It's not good or bad. But if you don't understand the repayment terms, the allocation rules, the interest comparison, and the tax impacts, then you're just reacting to the bank's marketing, and that's not how you build wealth. If you have any questions about RSP loans, drop them in the comments. If this video helped you think more clearly about RSP loans in Canada, then hit like and subscribe for smart money strategies you can actually use. And tell me in the comments, have you ever known more than the banker in the room? I'd love to hear from you. In the meantime, take care. I'll see you in the next one.